Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea. And thank you so much for our Thanksgiving, which is an incredible year for what we're doing in the digital space, not only with this little vignette, but all of Bloomberg podcasts, what Joe Weisenthal and Tracy Alloway are doing. Go out to YouTube, subscribe to Bloomberg Podcast. It's a compendium of what we're doing in live. We try to do it every morning. Today, live, we did it with Andrew Slimmon. He's wonderful, out of Chicago with Morgan Stanley. Writes a brilliant note. Get that note through Morgan Stanley. And here's my Thanksgiving gift to you. Bottle this answer. Andrew Slimmon on the markets.
If I go to my Bloomberg terminal and I look at what has worked from a style standpoint the last 10 years, value, growth, dividends, what's worked according to your Bloomberg? It is momentum number one and revisions number two. Long down the list is things like dividends, quality, value, growth. It is momentum and revisions. And the reality of the market is that earnings, i.e. revisions, are very strong right now because the economy, for all the talk, earnings have come in better than what really Wall Street thought, certainly since April, but even since the beginning of the year.
Slimmon physics from the gentleman from Princeton. Let me walk through why what he said is so important. In the Newtonian model of this, which is based around the calculus, and take physics, where you're like on the road standing still, and then you have velocity, you put your foot on the pedal, and then you press down or hit the brake. That's acceleration, deceleration. That's a second derivative. So you have an earnings belief out there, and then you have revisions, which is the change of the belief. And what he's saying is what's moving the market, and I think of Gina Martin Adams now on margins on this as well. What's so important here is this quarter after quarter after quarter of constructive revisions, the second derivative of the earnings belief, the profit belief in corporations doing better than good. Again, Andrew Slimmon here on The View Forward.
My argument, Tom, is the stock market is following a classic behavioral path, which is, unfortunately, the only consistency of this business, and you know this, Tom, as well as I do, is people sell low and they buy high. It's the only market I know where when prices go down, people want to sell.
Right.
Well,
you just described my investment strategy. Exactly.
Well, it's triple long cash, whatever you have. But look, in 2023, we had just come off a 25% decline. It was a wonderful opportunity to buy stocks, but the reason why we had a 25% decline was the Fed was raising rates. So suddenly, now short-term rates look attractive.
Andrew Slimmon there, and just a little vignette. What a privilege I had in my ute. A gentleman named John Galbraith up in Toronto with Templeton Global Investors said, please come up and meet John Templeton. And John Templeton, when I could shave maybe twice a week, I'm lying, once a week, said just what you heard there from the great Andrew Slimmon of Morgan Stanley. What do? We sell at the bottom and we buy at the top. We're on a podcast, Apple and Spotify. We're on YouTube podcasts. It's single best idea.